Hello, family. This is Q with Mixherbs.com, and today I want to talk to you about what the Fed has admitted. Hit that like button, hit that notifications button, subscribe to my channel, and we're going to dive right into what the Fed has admitted. The Fed has just admitted that home prices are going down, they're on the decline. They admitted that the market is most likely going to correct itself, and that's the direction that it's headed in. So we're looking at prices declining, home prices and everything. And so this was coming from the Fed Governor Christopher Waller, and he was asked about do he see what he sees in the new future, and he sees a market correction. So a market correction means that there's going to be a decline in the prices of homes. So what that means to everybody in family, that means a lot when it comes to the houses, because basically what you're seeing now with this decline in property, it's like the value of the homes are going down due to the interest rates, the market rates, the interest rates that you can get on buying a piece of property. And that's basically equity that a lot of people who have had their homes then built up over time, and now it's starting to kind of dwindle down, not be as much as it used to be. So let's say you might have had $100,000 equity in your home, or you might have had 90,000, $80,000 equity in your home. Now you might be seeing anywhere from if you had 100, you might be seeing 90. If you had 90, you might be seeing 80. If you had 80,000, you might be seeing 70,000. So we might be talking about like a $10,000 drop or something like that. And this particular correction, it has some impact on everything because now you won't be able to sell your house at that rate that you was looking at selling it for, and then houses are basically going to stay on the market longer too because of the fact of the high inventory and the higher interest rate that people are getting, because right now we're right at about 7%. So the market is basically going back to what it was at one point, where it really was it wasn't the actual seller's market. It's more leaning to a buyer's market now. So that's a lot of the things you got to look at. And now that we know that the Fed has admitted it, now we know for sure what we're looking at and what we have to be on the lookout for in the near future. We know where we're headed. So in terms of, sometimes you might want to just hold if you don't really want to sell your house as a buyer real soon. You just hold on to it for a period of time. I would say you hold on a year, 2 years, 3 years, and the market might change again in the seller's favor, and you be able to get that price that you're looking for your home. And then as a buyer, if you don't have a lot of cash right now to put down on a home, and you don't want this high interest rate, you can just hold on to wait to a shift in the interest rate goes, and then you can come back and buy that particular home at a particular rate that you would like. It probably go down some, like to 4 or 5% in a couple of years from now. So you go down to 4, 3 something%, then you can buy the home right when that happens. So it's basically at that point you'll be trying to time the market. So you can play your cards right and time the market on what you are willing to do. So now is a chance you look at the situation and you say, hey, what do I want to do within the next 3 years? You know, Monitor the market and then get in at the time that you want to get in and get that deal that you want. So these are just some tips and some information I was just going to share. This is Q with Mixherbs.com. Hit me some comments, throw me some comments out there. Thank you for watching. Thank you for listening. Peace.